Hello and welcome back for another Quant price prediction update, and in this video I'll be diving deep into the technical analysis and also give you my next price targets. And before I do so, show some love by first giving this video a thumbs up, subscribe to the channel, and also check out the channel membership. And since yesterday, you can see that Quant has been giving us higher prices, where you can see that we saw a massive breakout from the area that we have been trading within at around the $96 mark. And right now we have managed to break above significant areas of resistances, where we have managed to break above the $100.3 mark, the $110.9 mark, which was also acting as a resistance. And at the time of this recording, we are now eyeing our next key area of resistance at around the $119.9 mark. And a break above that and a successful retest of that key area of resistance will help Quant to get to the next key area of resistance at around the $124.9 mark. Here on the Quant chart, I'm also trying to track an Elliot wave structure, where I'm trying to get to see whether we are going to get a 5-wave move here on the charts. And once you see such an Elliot wave structure play out, that will be enough confirmation that the low here on the Quant chart is in, and that we have started another impulsive move to the upside in what I'm terming as the formation of a larger Elliot wave count 3. And for better understanding of that, I want to first give you a recap of what I've been expecting here on the Quant chart, where you can see that after seeing our bear market low at around the $40.1 mark, we saw a 5-wave move to the upside, giving us a high at around the $229 mark, completing the formation of this larger Elliot wave count 1. Then we started a corrective structure in the formation of a larger Elliot wave count 2, where we have been breaking down in this ABC corrective structure, almost fully maximizing our minimum target area, highlighted on the charts using this red target area that I came up with using the Fibonacci's, connecting them from the bear market low to the high of that larger Elliot wave count 1, giving me a minimum target area for that wave 2 between the fib level 0.5 and the fib level 0.78. And since we have fully maximized that target area, there are chances that in case the impulsiveness that we are seeing at the moment continues, we manage to break above significant areas of resistances and also above significant highs here on the charts. And also in that move, we also get a 5-wave structure to the upside, followed by an ABC corrective structure, confirming to us that the low for that wave 2 is in. Then I'll be expecting Quant to take us back to the area at around the $400 mark. And the reason as to why I'm saying that, if I use the trend-based Fibonacci to give you a minimum target area for this larger Elliot wave count 3, by connecting the trend-based fib from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, that now gives me a minimum target area to the upside in the formation of that larger Elliot wave count 3 at the fib level 1.618, and that is at around the $398.4 mark, and that is the minimum target area for that larger Elliot wave count 3. And we also need to have a worst case scenario in mind, where initially on the charts I had been saying to you that basing it on the Elliot wave structures, the most ideal situation was that Quant was supposed to give us one more leg down below the $94.3 mark. In case we see a turnaround from the upward movement that we are seeing at the moment and we see further breakdown, then that will still remain to be the most ideal situation, where we can get one more leg down below the $94.3 mark. But once we continue gearing up and see a break above the significant high at around the $165.1 mark, then I won't have that in mind anymore, and I'll be much focused to the upper side, having my minimum target areas at around the $399 mark here on the Quant chart. Also taking a look at the indicators on the RSI, we are trading at around the 71 mark. On the MACD, we have been able to print a bullish cross, fully supporting higher prices. So let's be patient and see how that plays out, and I'll be keeping you updated.